Welcome to our today's feature presentation, Why and How to Trade the Earnings Season. Stocks experience strong price moves when publicly traded companies deliver their quarterly earnings reports. We share a systematic approach how you can spot and participate in those opportunities as a retail trader. My name is Thomas Barman and I'm your presenter today. I want to make you aware of the risk in trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. Let us dive into the topic of the earnings season. At Never Lost Trading, we start to look about 20 days or 4 weeks, 20 days are trading days, in advance of the earnings call for price move indications, buy our indicators and act on them. Let me share an example with you. What you see here is the Never Lost Trading top line chart for the stock Nvidia. So the big graphics card manufacturer. And so you see here in advance of the earnings, which will occur on 11/17, we found a buy signal. And we call this buy signal here power tower. The candle with the cyan dot is signified as a power tower. It stands tall and points a direction. And with that, in our system always comes an expected price move. So where does the price move start? When the next candle ticks out that price threshold, 257.09, and then where it's supposed to come to 295. So we predefine that and we act on it because we know there's certain plays coming into earnings, there's certain coming out of earnings. And I give you all the details here in that presentation of how we trade in and out of earnings and which rules we apply. But here you see we always specify when do we want to buy or sell an asset, how do we act on it, how far will we carry out our trade to come to target, and also there is a stop. You see here this dashed line here on the bottom. That's what we can use, and then you see risk reward on that opportunity was pretty favorable, and we had planned to be out before earnings, which we were, and that has a reason which I'm going to explain in the continuation. Price moves the day and after earnings can be very volatile and with that expose us to an unbalanced risk. So typically we do not want to open or hold speculative positions 2 days before earnings and the day after. That's a very important rule we apply and we show you examples for that. Because of that volatility, we don't want to have a 3% potential risk and then end up banging in a 10% loss. So this we do not want to happen, and we use certain strategy to limit the risk, and we will reference to that. And the reason is some of the market players, the big money, sometimes plays games in and out of earnings, and we do not want to get ripped apart while we want to be participating, as I showed you here on the Nvidia chart. When that occurs about 4 weeks prior, there is a move to the upside or to the downside after, and before the earnings, there we participate, and we'll do that with a very high likelihood, high probability trading above 65% attainment rate. A critical question: what do you do if you hold a long-term position and you want to hold your shares over earnings? We share systematics with you so that you can limit the risk of every trade to a maximum of 5%. That's what we recommend to every retail trader. Do not let one of your trades take more than 5% of your holdings, because then you expose yourself to an unbalanced risk. Rules are important, and we show you systematics and strategies how you can comply and follow those rules. Let me share an example here for Starbucks, how we traded out of earnings. So you saw in the earnings call, the Starbucks share made a huge drop. And we weren't part of it because here the chart wasn't indicating that we should sell into earnings, so we had no indication, no reason to trade. But out of earnings, 2 of our indicators signify if those price thresholds get taken out in the continuation of the next candle, go long and exit your target up here. So the price went a little higher and then pulled back. It doesn't matter to us. We play by clear rules. The entry threshold was buy above 110.15. That was confirmed in the price movement of the next candle, and then we also have a time perspective on that. We say in about 5 bars, here it's a daily chart of 5 candles, 1, 2, 3, 4, 5. So you see in candle number 1, 2, 3, 4, we were out. Yeah, so we take a time perspective and the SPU perspective. I'll explain the speed move. The speed move defines how far we move that target here. And so you see how a system can help you to be out before the price pulls back and to be in when it matters. Successful trading contains multiple skills and rules that can be learned. It is important to understand that as a trader or investor, you always consider you are making an assumption about the future outcome of a trade, but you only control the risk by applying risk-limited strategies. And only the trader that is limiting the risk will make money long term, because not being surprised by big drawdowns in the account. And the skill is rarely to be found, else we wouldn't be here and share that with you. And that's what we help. We'll teach you what is needed to be a trader, applying successful rules and acting at key price turning points. What is the earnings content? What's included in the earnings report about the business performance? So commonly we are having information about the balance sheet, assets, investments, where things are going and where they came from, income statements, so per sector, per product, per market, cash flow statements, so how much cash is in the company, usually based on an EBITDA, and market and sector performance and how the company rates. Out of all of that, the market usually takes a reaction, and it can be very surprising to a trader. And so with that, we always want to be very risk limiting, or not considering to trade over earnings, but in and out of earnings, as I already explained, and I show you more examples. Around earnings, some of the stocks follow a seasonal pattern. What you see here is the chart, and I'm going to magnify it in a moment for IBM. Important is we build a study that gives an idea where the peaks and valleys are, at which time of the year we usually have a major price change, and we have arrows on the chart that we specified, like making a bigger than 5% price move in a matter of 10 days here on the chart. And so therefore in the actual, IBM made a bigger move, but we'll want to look at the chart of how it was. So we came in basically here and we made a 16% move to the downside. So imagine you be part of that within either selling the stock short or participating in that opportunity that was painted on the chart by our seasonal projection study, which is part of Neverlos Trading Top Line. And in a couple of those opportunities, your tuition is paid back quickly, because you'll know in advance that this stock has the opportunity to make that dive, and it did it like 4 out of 5 times. And is the pattern always repeatable for every stock? No, it is not. We work with a probability, but we can predict with a high probability what the future price move is, and will act on those indications as you see it here on the chart. And you saw when the price of the actual IBM share came down to the seasonal projected price that our study does. So now we are matching and meeting here, and so in the future we go rather up than down, and if you still hold a position, so it's good for you to close that on that bar, because now the price move to the downside is supposed to be over. When is the start of the earnings season? By the reports of the big financial institutions, JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America. The earnings season, our day, starts about 2 weeks after the quarter. So that means the next quarter coming up, January 14, will be the start of the earnings season by JP Morgan declaring their earnings. But these companies are also important for doing estimates of the expectation of other companies for their quarter. Those estimates contain earnings per share, and I give you an example later on for Disney, sales, profit margin, unit sales, and the forecast is considered by the key rating agencies like Reuters or Bloomberg. And on those numbers we have an idea of where the earnings should be, and then actual is catching up, and with that we have often major price moves on an earnings beat, or if somebody is performing or a company is performing below the earnings expectation in some of those indications. On November 10, after the market closed, Disney reported their earnings. And you see here they missed their earnings by a good margin. yeah, about 30% below the expectation rate. And on the other hand, also when you see in their revenue, they made a dive to the downside. And here you see the first time since the last 3 quarters that they were producing and claiming a loss in the quarter. Yeah. So what does that mean? Then the rating agencies go in and say buy to hold, and you see here, for example, from August to November of how the agency rate that. But everything about earnings at the end of the day is about outlook. Yeah, prediction is challenging, in particular when it's about the future. Hence, it's not uncommon for a company to beat expectations and share prices fall, or they report terrible earnings and share prices rise. That can be all played at. This is why we have these rules of the day after we don't trade and 2 days prior to the earnings we want to have a closed position rather than an open position, because then we are not exposed to an extreme risk opposite to what's declared on the earnings conference. For specifying entry and exit prices with our models, we use the following schematic. Yeah? Institutional investors are driving the price outside a certain containment, then it gets recognized. When others participate in it and drive it higher or lower, depending on what direction the market price take, our algo specifies a price threshold. When that price threshold is surpassed in the next candle with the help of the SPU measure, I'll explain that, we specify how far it most likely reaches, and then we take our profit. You saw that on the charts prior. So that's the model we have integrated in all our system, and this is why we always know at entry where is the exit. Also we know where is the stop, and we relate risk and reward in the trade and only trade if that is acceptable or favorable for us. If the opportunity is risky, we don't want the trade. We are not trading the trade, we are in the business for making money. We offer several systems, and you see here on a productivity index that they rate differently and they are comparable to each other. And a lot of our clients, they buy more than one. Why do they do that? They paid off the first or the tuition for the first, and then they add another to have a higher participation rate, so more trades per time observed, and with that they make a higher return. Our introduction system to never loss trading is tradecolors.com. And we this year have a special offer for you in that, but you need to contact us and then we'll talk with you about it. And if you want to upgrade from one system to the other, we always qualify you for having the price of Trade Colors deducted from the price of the next system to buy, and with that we'll give you a break as a continuation as being a customer. I already referenced SPU or speed unit as a key statistical function on which we are specify how far a price move shall reach and also where to place the stop. I want to give you a couple of more insights on that. The SPU is based on the statistical volatility of the price move of the underlying asset. It can be a future, a forex pair, a stock, an option. There's always an idea in the SPU. If there is a price move that's confirmed, how far shall it reach so that you can get out before counter actions are occurring. You most likely experienced if you're too greedy, you stay in too long, then you make less money than getting out when it matters. Instead of buying the stock, a risk-limited strategy applied by retail traders is buying call or put options ahead of earnings, and with that trying to catch a big wave. However, there is some difficulty in that. The problem is with this approach, often the options are highly costly or over evaluated in front of the earnings call. The reason for that is Vega. Vega is a measure of the implied volatility, and with that usually you have a high implied volatility coming into earnings, and taking it out after might not give you the returns that you want to have. We offer different strategies of how you can still participate and still make your cut, but this is what you will learn when you sign up with us for the indicators and our mentorships. Let me take again the example of Starbucks, where we were putting a trade in action after earnings. So here we had the earnings declaration. 2 days after we had an indication to buy the stock and to bring it here to target at 115. And so the action that we took here basically is when that price threshold was surpassed, we had a mandate that either after 5 candles we should be at target or we should close the trade. So what happened? Yeah, here we ended candle number 1, number 2, number 3, number 4. So we were totally compliant. Else after candle number 5, if we were not at target, we were supposed to close the trade, because at a certain point in time, key asset holders will flood supply in such a happening, and with that will bring the trade and the price down. And that's what we know in advance, and the system is telling us of how to enter and how to exit, giving you opportunities to trade at key price turning points in and out of earnings, but also on a day-by-day opportunity session. And so how do you find out those opportunities? We offer multiple alerts where we slice and dice the market for the opportunities based on our indicators. Yeah, so you'll see buy and sell opportunities for those stocks, and we map out all the details like we do here. How many days are there till earnings? What should you pay at max for an option? Yeah, so you see here 30-day, a 20-day, and a 12-day option. Which delta we buy will show you in the mentorship. I'm not going to give it all away here, but so these opportunities are all contained in the Never Lost Trading Alerts, which you can subscribe to, or when you sign up for the mentorship, you have the alerts for about 3 months for free when you are on top line. And then after, you can decide if you want to continue them, but also you have the opportunity to do your own scans with Never Lost Trading top line, so that you find the opportunities that you're seeking out for on your own. With the help of the alerts, you always know where is your entry price. Yeah, so here for example you have your entry price for those opportunities, how far you carry out the trade, where is the approximated stop, how is the risk reward related to each other. All this information is carried to you in the alert, so that you have it easy to put a conditional order or buy stop or sell stop order out there. Why a conditional order? If for example you wanted to buy a short-term option for $8.13, you condition it that the price of the underlying, here Netflix for example, is above the set price threshold, or here it was a short below the set price threshold, and then the conditional order carries itself out without the need for you to be in front of your computer. That's a big advantage, and all these little knowledge details are contained in the Never Lost Trading Alerts. We hope we were able to trigger your interest for trading the next earnings season based on our indicators and our studies. January 14 is when the next one starts. We are still currently in the end of that earnings season, but we also have earnings basically around every month, because some companies like Nike for example, they have a pattern of May to April being their fiscal year, and so with that they declare earnings at different point in times of the year, and we can participate if they have a seasonal trend in it, if they have an indication of a price move in or out of earnings, and you can be part of that with the Never Lost Trading indications and systems. In a top line mentorship, for example, we work for 20 individual hours with you at your best available days and times, and they will all be one-on-one meetings, so that we clarify your questions and we teach you the style of trading that suits your risk tolerance and your affinity to the assets that you like to trade. You learn all about entry, exit stops, risk limiting strategy, time in trade, which are good price movers where you have to be more careful, all contained in system and strategies, but very essential. You'll learn to do key entry, target, risk reward, time and stop decisions all at one point, so that you're not making mistakes and getting ripped apart. Think about, you are entering a professional business. Professionals are prepared, and as better we can prepare you, as higher is your likelihood that you can spot and act on key price turning points with the help of our systems. There's lots to learn when we work together. Trade repair is one of the strategies that gave us the name. Never stop loss trading. Instead of taking a stop loss, we adjust the trade with the help of options in particular. We talk about money management, so how much to invest per trade, how is the return. Working on a business plan that has two dimensions, an action plan, when are you supposed to trade and when not, and a financial plan. So how many trades can you exercise so that you reach your financial goals? And we look at all of your accounts starting from 401k, IRA accounts to the margin account. Yeah, so we'll help you with strategies for all of them, giving you the chance to risk limit what you do, find the trades, and work at key price turning points. A lot to be learned and a lot to be shared. We are while in business, and we want to give you a lot of content for the tuition that you pay for us. Take the chance and schedule a consulting hour. Best write us an email, contact@leveloustrading.com, with the indication when your best available day and time is. We try to accommodate. Just don't let it be 9:30 East, because then the market opens and we are usually busy putting our orders in. But consider, we are more than 10 years in business. We work one-on-one only. We're an algorithmic trading house that focuses on high probability trade setup at crucial price turning points, and we want you to be part of that. And we are looking forward to hearing back from you. Thank you very much, and good trading. Bye-bye.